where we have a trade finance solution that we are working with a pretty large agri-commodity facilitator or agri-commodity financing facilitator in India. And essentially, we're building a product that is not there in the market currently, and it has huge potential if we're able to successfully implement it. So right now we have begun the blockchain implementation stage, and I'll quickly discuss on what the prospects are regarding the same. So deep tier financing, so these are some of the most common issues that we face today, in the trade finance industry, or the trade finance vertical. Most of the operations are the entire services are built on trust itself. So there's a trust factor that goes around with anybody. So let's take our own use case, an agricultural commodity. There are so many participants involved in a transaction. So we have, let's just take, just to make you guys understand on what a typical transaction or what the participants of a typical transaction looks like. So essentially, you would have the network operator, that is the facilitator. That is the trade finance facilitator themselves, right? So that's going to be the company or the commodity facilitator or the finance facilitator that is running the blockchain platform or running this platform entirely. So that would be the BNO, the business network operator. And then essentially you would have the banks that are providing you the financing. You would have the warehouses that you're storing the commodities in. You would have the insurance agencies that you're buying you're buying the insurance on the commodities that you have in your warehouse. And then ultimately you have the buyer or the corporate client or whoever would like to purchase this commodity, in bulk with the financing option. So these are the multiple levels of participants that you would have on a typical agri-commodity trade finance transaction. So like I mentioned earlier, this whole process and all these participants it's very, very fractured, like how the communication works, exchange of information works. People are still holding a separate Excel files for each individual client, and they deal in huge volumes. They might have a huge number of clients. So it's very cumbersome to hold hundreds and hundreds of Excel files for one client, and it's difficult to sort through if you need to go back to re-reference a conversation or a contract that you had made. It's very difficult to actually retrace all of these steps currently. And like I mentioned on our first step, the trust mechanism. So trust is quintessential to any progress in the step of the trade finance place. So you need to, if I am buying commodities from the supplier, I need to trust either that the supplier is giving me good commodities, that giving me the commodity at the quality or the price that I have asked at. Or if it's a warehouse, we need to trust the warehouse, to keep your commodity safe. It could just disappear. The warehouse could just disappear, or so it would be a huge risk for the facilitator themselves. Then you have the banks itself. Why would the bank loan you money without having a credit history or a credit profile that you actively have with the bank? So this entire industry is built on trust. And then, like I mentioned, the transactions are really price sensitive, or the risky transactions. So because of that, there's a lot of fluctuations in the rate. So essentially, if you look at each of these participants, they all have their own ledger, or their account for each of the value on the commodity is accounted at any given point in time differently by all of these participants, essentially because they have separate ledgers. So the value that if we raise a pledge on the commodity that is in the warehouse, and we raise it at a value in our ledgers, the bank might have a valuation process that they do on the commodities, and they might revalue the asset and raise a commodity on a totally different quantity or a totally different valuation. So essentially what happens is our records are different right now. So we might think it's raised at 100 metric tons. We have a warehouse receipt raised at 100 metric tons, but the bank might have raised it at 95 metric tons. And then there's a requirement of a physical reconciliation where teams have to sit down and then reconcile the commodity value between each other. Because the nature of the fragmented nature of this industry, we have it's open to fraud and authenticity. People could easily replicate receipts. These warehouse receipts themselves could easily be replicated by it's a physical document essentially. So it has potential for replication and easy manipulation. Then, like I mentioned again, information is kept held in Excel sheets and email communications and WhatsApp communications and phone calls. So this is essentially not the most organized way to have structured trade finance communication or business operations run on. So that's essentially how all of the trade finance or the traditional trade finance operations are being run today. So there is huge scope of automation and digitization of all these processes. Simple processes can easily be digitized. And like you mentioned, it's a mostly paper-based service. So you have contracts that are manual contracts, and because of legal implications, it becomes very imperative to hold these contracts in the physical forms. So those are some of the setbacks. And like I mentioned earlier, traceability and transparency. So there is essentially, like I mentioned, just like the example of the commodity. So there is the value of the commodity is different for each of the participants. So there is essentially no transparency on how this value is being valued or how the commodity is being valued at. So there isn't a base figure or a base standard at which people are valuing at. It's not if a bank values the commodity at a rate, the access to this process of valuation is not available to the other participants, in the network currently. So essentially these are all of these functions together cause the trade finance or our application of the agri trade finance facilitation perfect use case for blockchain, because blockchain pretty much solves most of these issues.